So we've learned over the past year that AR and VR will face some near-term softness, but a leading indicator for the sector's long-term health can be seen in investor activity. So a few signals include the fact that $2.1 billion in VC funding happened in 2017, according to Crunchbase, not to mention the rise of XR-focused firms like Presence Capital and the Venture Reality Fund and Super Ventures, and corporate VC firms pursuing XR like Comcast Ventures, Qualcomm Ventures, and Intel Capital. So what are investors saying and doing? We talked to some of them for an ARtillry intelligence briefing that released last fall, and for one, they're showing some interest in building block technologies, and that includes things like processing and compression and positioning in the AR cloud, and the thought being that the best-of-breed software can scale by supporting an eventually large market. And of course, addressable market is another big factor, and is currently diminished by consumer VR's installed base. So a lot of VC interest has shifted to areas of near-term scale, including mobile AR and the enterprise. So taking those one at a time, mobile AR's benefits include its installed base and frequency of use. So ARKit and ARCore create about 500 million AR-compatible smartphones today, increasing to 4.3 billion by 2020, according to our projections. And business models beginning to take form include in-app purchases and local commerce. In terms of product models, some of the desirable attributes include natural stickiness, so apps that are grounded in a recurring activity like social messaging, or those that have a customer lock-in or a network effect. And again, building block technologies that can sit further down the stack and support several apps can sometimes scale better than front-end consumer apps. So on to enterprise, its advantage comes from a strong ROI case and bottom line impact, and we'll begin to see a meaningful hardware installed base around 2019 that paves the way for software, which carries the scalability and recurring revenue advantages of SaaS, which is something that investors really love. And desirable traits for enterprise plays include vertical or industry-specific knowledge in the areas where XR is being sold into, not just general technical chops when it comes to XR and immersive computing. And this is really necessary to kind of speak the language and know the culture and the cadence of buying cycles within those verticals. And that's one of the biggest things holding enterprise AR back today, as we covered in a separate report. And again, investors like recurring revenue, so a rap sheet of one-off implementations is a red flag, as opposed to diversified client base of ongoing projects. So beyond the product and revenue models, an equally important set of tactics comes down to the pitch itself. So one common thing we heard was do not cold call. So the first test of an entrepreneur's ability to sell and network is if he or she can network their way into the investor. Second, keep it short. So focus on quantifiable metrics such as the addressable market and your unit economics, and lose the cute metaphors like ape to man evolution slides. They've seen all that before. And lastly, show some humility. So don't get defensive to their pushback or questioning. Investors like to work with entrepreneurs that have a balance of confidence but also humility, which indicates coachability. So that really just scratches the surface, and a lot more can be seen in our full report, which you can preview at the link shown on this screen. And stay tuned for lots more published material and multimedia as all of these XR trends continue to unfold.